Good morning. It gives me a little bit pressure as well as excitement to start the session wearing a t-shirt. Good morning, everyone. I'm Dun Chao from Hashkey Capital. Hashkey Capital is one of the world's biggest and earliest institutional investor in the Web3 ecosystem. We now manage over $1 billion in asset and have supported over 600 projects worldwide since 2015. We are regulated in Hong Kong and Singapore as well. It is my great pleasure today to host today's Fireside Chat. My guest today is Cathie Wood, as you all know, the founder, CEO, CIO of ARK Invest. Cathie is renowned for her pioneering investment in disruptive innovations and is a fervent advocate and investor in the blockchain and the Web3 ecosystem. Welcome, Cathie.
Thank you, Deng. Thank you.
Before we dive into discussions, would you like to greet the audience first here?
I'd love to. I'm delighted to be here. I'm sorry I'm not there in person, but very honored that you've invited me. And listening to the regulators that I just heard from Hong Kong, I think we need to import a few of them to the United States so we get the regulatory system a little more well-oiled here.
Thank you, Cathie, for seeing that. We are all happy to hear. Our focus today is on blockchain technology, crypto assets, and the broader Web3 ecosystem. Let's start with big ideas. For years, you and your team at ARK have consistently highlighted the blockchain and Bitcoin in your big ideas report. Could you share with us the macro backdrop and what might be the impact of blockchain and Web3 on individuals and business alike?
Oh my goodness. Yes, that's a big question. We have featured blockchain technology, starting with Bitcoin, regularly in our big ideas because we think this is a big idea, a very big idea. And one of the reasons it's such a big idea is that if you think about it, what we're talking about, starting with Bitcoin, is the internet financial system. This is what this system is what the developers of the internet in the early 90s did not put in place because they never thought that commerce and financial services and other things like Web3 would take place on the internet. It was a long time ago. It just thought there would be information exchange. So what is happening now is developers are putting in place a layer that should have been put in place in the very beginning. It's a very big idea because it's global. It transcends borders and reaches everyone with an internet connection. And so we're excited to be a part of this. One of the other things that is happening, and I think it's because of generative AI, this happened in the last innovation revolution that took place in the late 1800s and the early 1900s, when we got telephone, electricity, and the internal combustion engine. What happened then is the work week went down. People had more leisure time as technologies increased productivity and increased wages. And so we think that's going to happen again, perhaps at a faster rate, giving people more leisure time. And from our research, online time, relative to total waking hours has gone from 30% in 2010 to 40% in 2020. And we think it's going much higher in the years ahead and will constitute the majority of our time within the next 5 to 10 years. One other thing from a macro point of view, we learned this in the last couple of years that Bitcoin in particular, and maybe other crypto assets, are not only risk-on assets, meaning they do well during bull markets, but they are also risk-off assets. If you look at Bitcoin in our own regional bank crisis last year, when the regional banks were imploding and going bankrupt, some of them, Bitcoin rose 40%. And then this year, as we're seeing currency devaluations in the emerging markets around the world, you're seeing Bitcoin take off. And we think part of the reason is individuals in many countries around the world are starting to understand that Bitcoin could be an insurance policy against devaluations in their own currencies.
Thanks, Cathie. Since you talk about AI, I think it has been the talk of the town from Silicon Valley to major business and tech centers like Hong Kong. You also highlighted it in your big idea reports. So I would like to follow up by asking, how do you see AI integrating with the blockchain and Web3 technologies? What potential synergies could these two sectors create?
Yes, it's a great question. We did monthly, we do a Bitcoin brainstorm. The second installment of that was about the convergence between Bitcoin and artificial intelligence. And in that podcast, what you will learn is that all of us in the developed world understand the gig economy in terms of Uber and Airbnb, and I'm sure there are many others in Asia. But what's happening in emerging markets like Africa is the gig economy is now turbocharged, and redefining the division of labor into micro tasks. So that's what we think is going to happen on one level. We also are seeing blockchain technology and gaming, which is powered more and more by AI, converging. And it's very interesting. I think just today or yesterday, your time, we saw that Sony Bank is investing in gaming and on the Polygon blockchain. We also, in our venture fund, are invested in a company called Mythical. Its game is called NFL Rivals. It's on Polkadot. And if you know anything about gaming, gaming really was the earliest use of AI. And the reason we know that is when we first started looking at NVIDIA seriously in 2014, when we first started ARC, we were looking at the GPU and gaming and saying, and parallel computing saying, wow, you can do amazing things. And now look at it. The GPU is the cornerstone or the heart and soul of this AI movement. And so gaming is probably way ahead of the game when it comes to the convergence between blockchain and gaming. But one thing I will say is I went to a very famous conference. It was Sam Bankman-Fried's last conference, Crypto Miami, I think it was, or Bahamas. And there, what we saw were a lot of people from the gaming world and a lot of people from the crypto world basically trying to get together. And what we learned from there is you have to start with the creatives, not as much with the crypto part of the equation. The blockchain technology should really be hidden from the end user, but it will be very powerful in proliferating games around the world.
Thank you, Cathie, again. Now let's shift the gears to crypto assets. On that, belated congratulations to you for your launch of your Bitcoin Spot ETF, along with the other top institutions, which has been a significant milestone for the industry. And we saw rapid growth of these ETFs to over 50 billion US dollars. What do you believe are the driving factors behind this remarkable growth?
Yes, I think many people are surprised because Europe had exchange traded products for a number of years, I think 5 years, and they never took off like what we've seen in the US. One of the things that happened is there's been a lot of drama. I'm sure you've heard about it from a regulatory point of view in the US. And the SEC was pushing back against anything crypto, and really defining anything crypto as a security. And the one asset that moved away from this idea of security was Bitcoin. So a lot of people, because it was so much in the news from a regulatory point of view, were trying to understand, what is this? And then the SEC approved 11 ETFs at the same time. That has never happened. And what happened was all of us got out our best marketing and educated investors about what this revolution is all about. And we were all coming at it at our different client bases, and a light bulb went on, I think, in the United States. And we certainly approached it this way, saying, this is a new asset class, a completely new asset class. And institutions and individuals should be very interested in a new asset class. Why? Because a new asset class is not correlated to other assets. I just mentioned that Bitcoin is both risk on and risk off. There are not many assets like that. Gold might be one, but not really. Bitcoin is really the first. And that caught a lot of people's attention. They said, wait a minute, Bitcoin goes up in a bull market and it goes up in a bear market for regional banks. I'm interested. And they began to look at it and saying, okay, if this is a new asset class, what happens is the low correlations, if you include this new asset into your portfolios, the low correlations mean that you can increase your returns for the portfolio per unit risk because of those low correlations. And I think a lot of investors here in the United States, both institutional and individual, said, okay, I'm going to grab a slice of that and try and increase my returns per unit of risk.
Thank you, Cathie. Compared to what you experienced in the US, I think we here are very fortunate to have very open-minded and forward-looking regulator here. Hong Kong has been showing tremendous support for Web3 industry, as is evident here from the community. So I hope to hear your advice, or what is your message here to the Asian Web3 community? What's your message to the regulators here, to the entrepreneur, investor, and users here in Asia and in Hong Kong particular?
Well, you know, we are very impressed with what the Hong Kong Monetary Authority has done in providing a comprehensive regulatory framework for exchanges and institutions from a custody point of view. This regulatory clarity is critical, we think, to enabling the technology, enabling the proliferation of the technology faster, perhaps, in Hong Kong than in the United States. We're in very early innings. I talked about the internet financial system globally from from a Hong Kong regulatory point of view, if you are encouraging innovation in Hong Kong, you're going to be encouraging entrepreneurs to move into a global opportunity. It's not just a Hong Kong opportunity. And for institutions, it's very interesting to see in our country, BlackRock already tokenizing money market funds. Now, they have 1 billion on chain right now. And that's even though we have faced regulatory uncertainty here. I think in Hong Kong, the tokenization of many assets, most assets, will happen very, very quickly. And, this is a global game. I think what's happening is there's regulatory arbitrage, but the results are global. You can be a regulator in a country, but what you're doing is enabling your individuals and your entrepreneurs and your companies to really start global businesses because, again, this is a global activity. It's also very good to hear how seriously, as I did right before my presentation here, or our fireside chat, Deng, really talking about the standards to safeguard the activity as well. That is really important, and we don't want to diminish it. I think I heard one of the regulators describe the aim is a healthy, stable environment to encourage technology while providing investor and consumer protections. That's ideal. So I would just encourage them to do more of the same. And I've watched here from the United States as we have been faced with regulatory uncertainty. I've seen a movement of our talent in the blockchain space to areas where regulators are treating them better, giving them more clarity and more freedom to operate as a result. So that would be my advice. Take advantage of the regulatory arbitrage that you're providing. And I'm sure your entrepreneurs will be able to scale opportunities globally as a result.
Thank you, Cathie. I think the audience wouldn't let you go if I don't ask this final question. This will be a $1 million question, probably on everyone's mind. Where is Bitcoin price going? We heard from a media wider range of figures. Some said from you, 1.5 million US dollars. Some said 2.3 million US dollars. Some even quoted you as saying 3.8 million US dollars. Cathie, tell us, what is your current prediction and what's the rationale and what's the timeline you're talking about?
Okay, I can clarify all of this, and you've heard it first here because I was asked questions from different angles. So our forecast for 2030 is $1.5 million. Now, that used to be our bull case. Our last published forecast was bull case $1.5 million per Bitcoin versus, I think, $66,000 right now. Now, those other numbers came from a study that we did about institutions. If they allocated optimally to Bitcoin last year, given using the Sharpe ratio and volatility analyses, if they allocated optimally last year, then 19% of their portfolios would have been in Bitcoin. Now that sounds crazy, but if they had, that alone, institutions doing that would have added 2.3 to that $1.5 million estimate. But that is obviously after a great year. Interestingly, this year is starting out even better than last year. So if I had to give you one number, it would be 1.5 million. If I had given you the number last year, it would have been closer to 600,000. Why did we add that amount to the 1.5 million? It's because of the green light that the SEC gave institutions in the US by approving the spot Bitcoin ETFs. And then one last thing, the optimal allocation, if you were doing modern portfolio theory over the last 7 years, would have been 5%, a 5% allocation to Bitcoin. That is how we get to that $1.5 million estimate, because we think institutions will be heading in that direction.
Thank you, Cathie. Everyone, you know the number, 1.5 million US dollars. With that, we've come to the end of this Fireside chat. Thank you again, Cathie, for your insightful and inspiring discussions. Let's all give Cathie a big round of applause. Goodbye and take care.
Goodbye. Thank you so much.